Yeah, Grand Rising guys. I hope we are doing very fine and great as well. I wish us a profitable week ahead. So yeah, today, you know, in the voting box, I think GBP USD and JPYPS has the same votes. And I think currently GBP USD and Euro USD is leading the voting poll, right? So this is GBP USD. Okay. So there was a very, very interesting buys that happened last week. Um, and I want to just case study, one or two things to okay, what really happened and all of that. Did you get? So as you can see right here, this is GBP USD. All right. So I don't know, but you can always I like to expand our horizon as far as price action view is concerned, right? Let's go to 12 months time frame. I like to see the bigger picture of things that you get. So I can always go to like GBP USD high CE to look for what a bigger picture, very, very bigger picture. And as you can see, overall time, it is all bearish. You can see. So this was a low that was taken out, and we didn't really get any form of intention to be really, really bullish in that sense, right? So we are still hold up in this up close candle before price expand against this sell side. So we are hanging on this, right? We are hanging on this up close, right? I'm interested in the body because we cannot, for precision's sake, right? Because right now you can see price is actually staying around the body right now. Price has left the wick, all right? Actually, the real order blocks we start from because you can see how price actually take out this low, right? So you can always use this low, this open of this candle, all right? Because that's the last up close candle. And before that was actually created, we took out this low to create the full candle of this because you can see opened right here, expanded lower and then closed at this before we see this massive displacement against this low, right? That makes this to be the real order block in that sense. So you can see we rejected the body, which is what actually prompt that sells. Do you get the idea? So, and from what I taught us in the last teachings, right, you can see price rebalance this gap, right? This CB, right? So what does that mean? We want to see this high. You can see when this gap was rebalanced, this very high held this high. What I said was that whenever price rebalance the gap like this, you don't want to see that high being taken out. You want to reference that high as what as a strong high. That is how I trade, right? You want to see that has a very strong high in that sense. You don't want to see it taken out. So from that idea, you can see what happened. Price displaced lower and then take out the sell side. So how strong is this high really? We have several up close. We have another up close candle here, right? Before price displaced lower here. So when price took out this low on this candle, you can see the open of this candle traded high to trigger the low of this candle, and then we dropped lower. The body is still there, yet to be triggered, right? So that is for another future signal. Currently, how strong is this high? You can see when price was going up to attack this high, we have this looks like a nice breaker. We can see that swing low right there. So whenever price, you don't necessarily have to see a single candle down close that attack a high and then dropped. Of course, you have several breakers here. This is one breaker that price used here to trigger to sell for this whole amplitude. When it comes to amplitude, price use this low. You can see price trigger that And the real amplitude of price was when price used this whole structure range, and then it was triggered here when price broke it significantly here, right? So significant here, it was just a little bit here, but it doesn't really matter. The weeks does not matter when it comes to when you understand what you are looking for and the real part and the real direction of price. It doesn't really matter if wicks break the structure or if candlestick body breaks the structure. So in that sense, this is the real break of structure there. So when it comes to real amplitude of price, this was the low that broke the structure, and then price returned back to this breaker that took out this low. But originally, we still have another breaker here. We have another strong structural low. Like when it comes to a bigger amplitude of price, this is the real structural low. This was just a fractal breaker. This is another breaker, this is another breaker, but this is a fractal breaker. What does that mean? We have a larger breaker and we have a smaller breaker that is inside the larger breaker. So that's fractal. Do you get? So we use that to trigger the cells to attack this low. Do you get? So, and for this eye, it is triggering the bigger breaker, which is this low, right? So let's see if you touch the body of the candle. It didn't, but at least this low, all right, this low of this candle coincides with that gap. So that makes it somewhat strong. Hadn't been, enter these bodies would have been so perfect, actually. But that is still very good. That is still very, very good. So this eye is still very strong because price doesn't really show any form of momentum to kick out this high, right? Unless we get to see a failure swing and then take out this high. Do you get the idea? So that's it. So unless you see a swing, failure swing to take out this low, do you get? So right now, price is showing us bearishness, right? So literally, we still have a gap here. So price rebalance this gap. So if we want to, let's say we want to predict or anticipate price to draw to the 50% of this, which is can be like a very nice draw on liquidity, right? So we want to see this high hold price because there's a small gap here. Price has already rebalanced that, triggering this up close candle for bearish price. Now we want to see price hold this high. We have to be looking for, now price is trading higher to do what? To look for a resistance to sell from to drop to this level, right? So looking at this higher time frame action, right? That does not actually stop you from trading lower time frames intention as well. Do you get? But this just give you, eagle view of what's really going on. Do you get? That's the idea. So draw on liquidity of the consequential placement of this week of this candle. So that's it. So GBP, let's go back to our GBP USD of this guy, which is forex.com. So let's go back to our monthly time frame. So now, coming to monthly time frame, what can we see? We can see that we have currently, what's the current price action? What is it doing? Now, based on the current price action, price triggered this up close candle, right? Initially, when price was going up, price triggered the body, but we have a gap there, right? So originally, when I see a gap like this, a low that completely closed a gap like this, and then price broke that low, I will originally see that as break of market structure, basically. I will see that as break of market structure. So this is all just retracement back to this whole leg. Do you get what I'm saying now? So when you get, because basically when you have an expansion, you have to see retracement back to that expansion. Do you get? Or impulsive move, corrective move. So which means that basically we are basically and structurally we are trading. If you are trading this is just a correction. That is my perspective of price. But context, let's talk about context. When we're talking about context means that you are looking at price neutrally. What is the neutral ground of price? Price is bearish. It is very bearish, right? It is obvious that it's bearish. On the higher time frame, it is very bearish. Do you get? So that is context. Now, you use perspective to view context. So when you use perspective to view context, perspective is like the way what you believe about how price deliver in the marketplace. Do you get? That's your perspective. No. Now, my own perspective, I've already explained that to us. It is based around liquidity, structure, market structure break, when, gap, fair value gap, PDRAs and all of that. Do you get? That is how I look at price. But for you, it might be support and resistance, RSI, moving average and all of that. That could be your perspective. Do you get? So when you use actually contest is like we have two type of contest. We have a parent contest. A parent contest is when the original, the original view of price without any filter, without any perspective using to view it. Objectively, what is happening? Price is very bearish. That is contest. That is parent contest. Now we have a subordinate contest, which is when you use your perspective to view the original or parent contest. Now you have a subject, you have another contest, which is subordinate contest. Now that subordinate contest, it's like your own contest. Do you get? It is not the market contest. Do you get now? So when you have contest of that, which is your own contest, do you get? You now have your own contest basically in the sense that it is not market contest. You use your perspective to view market contest, which is what created your very own contest. Do you get the idea now? So when that happens, right, you will use narrative and framework to back it up, right? So now, since I've used market, let's say smart money concept, which is a perspective to view price or to view the original context of price, and I have another context, which is my own context in the sense of, okay, I want to, in this small range, right? I want to see price. Price has already broken structure because when price rebalanced the gap and created a significant high like this, right? It has taken structure. It has broke structure. Do you get? So which means that this is an impulsive leg and I'm waiting for corrective leg so that I can sell from. Do you get the idea now? So when that happens, what else am I looking out for? Me explaining all those things that, okay, we have a low here that rebalance the gap and then price has traded up from there, take out structure, take out buy side liquidity. We have what here? We have proportion block, which is what to guard this sell from here. Those are all narrative. See, you have to have a systematic way of process that you use to approach price. You can't just go to the price and then start looking at what's not lost. The market is a very big, unstructured ocean. Do you get? So you have to bring a structure in to understand what you are doing, to know your process, to know it step by step. Do you get now? So I've made it simple. We have contest, which is market contest, which is a parent contest. Do you get now? And then we have perspective. You use perspective to view a parent contest. Now, my perspective is smart money contest. Smart money concept. Do you get now? So that's my perspective. So when I use that to view that, right, and I have a new contest, right? So I will name that contest probably, let's say, smart money concept contest. Do you get now? So I have to have a narrative to back that contest up, that my subordinate contest or my perspective. So using that narrative, okay, I will say that, okay, this is a proportion block. That's why this sell actually happened. And then we have a strong structure here that was broken. Now we have a market structure break. So we are waiting for what? A retracement, since this is an impulsive leg. So we have to see a retracement inside. Do you get now? So after this retracement, I'll have to sell. So those are all narrative. Now, talking of framework, it's like structure. Now, I said this low, rebalance this gap, traded higher to take out buy side liquidity and all of that. Now, and I have structure, we have framework now. We have framework now in the sense that I'm looking at a retracement to go into this leg. So how far do I want to see that retracement? I can be like, okay, 50% on all of that. Or I can be looking for PDRAs or institutional order flow or reference points to look for price. Now, we have a small gap here, right? We have a very small gap here. I can be looking at that as a draw on liquidity for price to sell from. Do you get? Or the body of this candle, right? Price can go as far as that. But the thing is, I don't want to see this eye taken out because this eye originally did what? Rebalance the gap as well. Do you get? So if I'm, as far as I'm bearish on price, I would want to see this high hold so that I can sell to these lows, right? So look at this gap right here. So now for contest's sake, when price was moving higher, this low was a very strong low initially, right? But you have to understand something very well. When it comes to price rebalancing a gap, you don't have to be fixed about the idea that you don't want to see the high taken out or the low taken out. But, there are something markets will do. You have to refer back to the original contest, which is market contest. Market can always do whatever it wants, regardless of how you frame your model. So my model is that whenever price rebalance the gap, I don't want to see that low that rebalance or that high that rebalance the gap to be taken out. So market can do its thing because anything can happen. And then went ahead to take out that low or high. Now, originally, what's my point now? What I'm trying to say is price was rebalanced here, and the market went ahead and take out that low. You can see that what I'm saying now. It can do anything. Do you get the point? So when that happened, what happened? Price expanded higher. Now, for this sake, this low has already served its purpose by delivering higher. All right, it has already served its purpose. And even though when price retraced higher and then come back, when price expanded higher and then come back to retraced, you can see that high actually hold price. This low held price for higher price delivering purpose. And that happened and it's done. It's just done. Do you get? So based off my own perspective of same price, if price traded to this gap or this high of this body of this candle, I would want to see price trade back to this fair value gap, probably for a full delivery or full closure or fully efficient price delivery here. So what do I mean? I want to see a full closure of this. If it didn't do that, at least I want to see this sell side taken out. Do you get the point? So that's the idea. That's the idea. And if you look at this point very well, it coincides with that level of 50% that we are trying to drill out on a yearly candle on ICE server. That 50% week that we're trying to drill out on ICE server. Do you get? So it actually coincides very well with it. So now, from market perspective, from market context, I already told you what I'm going to what I'm expecting for price here, which is retracement to this or this. So you can always be a buyer as well to just to this level. Do you get? Right. So of course, if price is showing willingness to draw, continue to draw to that level. Do you get now? That's the idea. So when that happens, price will drop to this level. Do you get? So that's all our expectations based on my perspective that I used to view the original. Remember, market context or parent context of the market, it's like reality in neutral. It is very neutral. Do you get? It was very, very neutral at that spot. Do you get now? But when you use your perspective to view it, you have reduced the quality of the market context. That's why I call it subordinate context. Do you get? From parent context to subordinate context, because there has been a reduction in quality and quantity of that parent context. That's why you have a subordinate context. So there's going to always be a flaw in your perspective. You don't have to be perfect about it. That's why price took out this low. Do you get what I'm saying now? Because there has been a reduction in market context. I wasn't looking at markets in its own context. I'm looking at market in my own perspective, in my own structure. Do you get now? But that doesn't mean that price will not, in a sense, disrupt my structure. Now, that was what happened here. When price is balanced this low, right? What happened? It rejected to this high, opened at this candle, and they started selling. And then eventually took that low. Originally, that was supposed to be a strong low, right? Based on my perspective, based on my subordinate context. Do you get? But it was disrupted. So which means that this is market context. This is original market context. Market context, we always do whatever it wants to do. Do you get what I'm saying now? So don't forget my own perspective or my subordinate context right now, and based on how I've actually framed price and how I've actually explained the narrative and all of that, is that we want to see a sell. So for easy execution, both of your framework and your narrative has to be very, very simple. Don't make it hard, because by the time it's hard for you, you are not going to execute. Make it very simple, very, very simple, because when your framework and narrative is simple, your execution will be very flawless. And it's very simple. My narrative was that this is a strong low. A strong low has been broken. And from market perspective, this is a low, this is the last low that created a high, which is like a structure. Now we've seen a break of structure in price. So we want to see a retracement back to price, because this is a impulsive leg. Now we have to see a retracement or corrective leg to sell from and then target our sell side liquidity. Or if you are not targeting this, you can see this low and this low are quite relative, right? So it's very simple. That's my framework and my narrative. One price got to my level of, operation, I will just wait for the correct things or confirmation in price, and then I trigger my entry, execute ASAP. It's very simple. Now, I want to show something. I've explained my own perspective of what I'm expecting from price. Do you get? So now, look at this. Price did what? We have expansion, right? We have correction, we have expansion, we have retracement. Do you get what I'm saying now? So you can see this is a whole lot of structure, right? This is the corrective phase of that structure. This is another expansion. We have correction. Do you get? So it is very simple for price to keep buying from here. That is from market perspective. If you are considering this swing, it's want to actually, in a sense, maintain that bullish structure. But I've used another filter to view price, which is why I'm anticipating a sell from here. Do you get what I'm saying now? So that could actually be what want to really, really happen. What the perspective that I use to view price, that might be it. But to objectively view price, to just be looking at price objectively, okay, price went, retrace, go up, retrace. So some people will just be like, okay, it is very normal to see price buying from here. This one is just inducement, and then price will just keep buying. Actually, the right word is not inducement, induce, induce. Induce sell-side liquidity. What does that mean? At this low, there's going to be a lot of sellers waiting for breakouts. So at this point, they are already in loss because price is buying. They are being induced. Sell side are being induced. There are two victims at this low. The first victim are the sellers waiting for price to keep selling on breakouts. They're already in loss now because price is currently buying. Another victim is people that that are already buying price. They will be buying this price, anticipating it to keep going higher. Right? For the fact that price held this low and price held this low, now prices are already moving. They will move their stop to this low now. They are already out on this low. Right? So those are the two victims. So basically, looking at markets objectively, expansion, retracement. It is just simple as that. But if you are looking at price on a very big lens, just like the way we did from 12 months, it is overall bearish, which is why I'm framing bearish price. I hope you get the idea now. So that is that from me as far as this guy is concerned. So to compress everything to what is going on this week, or what happened, why did we get this buy last week? So you can see the body of this candle triggered. This is a very nice delivery. This is nice. You can see the body of that candle align with the open of this candle. The open of this candle aligned with this close and then aligned with the open of that candle. You can see when that candle opened, that is a very nice reaction. Very, very nice. So on this week, price closed this gap. So on the open of this week, what does that mean? You don't want to see price take out this low, right? That's what it means. So we can go to H4. You all know how I do it. From weekly to H4, from H4 to 15 minutes. I don't complicate it at all. At all. I don't want any form of complication. Do you get? So we have another low that balanced a gap here. Right? Which means I don't want to see this low taken out. But it can come. I can allow it to come because of the fact that it is not efficiently delivered. Because we have the original low here. But based on refinement, you have to know how to refine very well, which is why you don't see me go straight to much more lower time frame. I believe H4 reflects more of what weekly wants to do. Do you get? So we have a breaker when price took out this low or this low. So we have that, the high of that candle. So this was CPI sell. And then you can see the reversal that happens. Originally, CPI is just a strong candle to the upside. That's the consensus. That's the mass consensus belief about CPI. But when you are working within your home framework, narrative, and perspective, you just have to follow whatever it says. So what it's telling us right now is just on that opening itself, you'll be anticipating price to touch the breaker as well, right? And that happens. And all these candle are what? Other blocks, right? So you have to be buying. And if you are buying, we already have a level of target for price to reach through, right? Look at this low. This eye is very clean. This eye is very clean, right? So that could be a level of target for us. So let's go to 15 minutes. What happened on 15 minutes? So after price triggered that breaker, right? We had a failure swing. We have a failure swing like this. And then from that price, but there's two failure swing fractal that happened here. When price dropped, price traded up. We have one original failure swing and then price expanded higher, right? And then after that happened, price retraced back to the other block or to the fair value gap of that failure swing, which is a very nice entry. It could be a buyer here, holding price for your long-term delivery. You can pyramid if you understand what price wants to really do. You just keep pyramiding whatever price. Just know that down close, when you are bullish, down close candle will put price higher, right? Down close candle, down close candle, down close candle on H4, keeping price higher. Down close candle, keep price higher. Down close candle, keep price higher. You can see, keep price higher. Down close candles, keep price higher. This is originally the down close candles, but precisely, I think price came for this. Down close candle, keep price higher. From here, the down close candle starts, but originally price, we use this one. Down close candle, keep price higher. You can see, when you are bullish, down close candle will keep the price pushing higher. When you are bearish, up close candle will keep price keeping lower. Do you get what I'm saying now? So that's the idea. So that is why this happened, right? So okay, let's focus on what can we be expecting for this week actually. So don't forget, this is our draw on liquidity. I think on where is that level safe? Well, we can be looking at this O of this gap. Okay, we are looking at this high to be delivered to. All right. So what do we have? We have a well-pronounced low. We don't want to see, yes, we don't want to see this low taken out, right? So another thing is this candle, this bullish candle here. That's the last bullish candle in this range before price actually took out this very low and start a new buy, right? You don't want to see, you don't want to see this low taken out. So this is looking like a breaker and price has already opened on that high. So be very, very observant of that. So price, we're anticipating price to still move much more higher, right? To deliver price. So that is what we are expecting from price, right? So yeah, I think that's just it. That's just it. So don't forget, if you are selling, where are we selling to? This low. This is a very good level. A very, very good level. This looks like a nice proportion block to buy from or to reject price. But overall, price is still bearish. But don't forget, our draw on liquidity on yearly candle is the 50% of that week. But overall, price is still bearish. Sell side liquidity and buy side relative equal high. Do you get what I'm saying now? So since this guy and EU actually moved together, I want to show something on EU as well, Euro USD. I don't want to talk too much. I won't be able to go to EU explaining a lot of things about that guy. But we already know that they all move together and they can as well have the same target, which is going to be in form of sell side, right? So for Euro USD, right, price is showing us that we've rebalanced the gap, a nice gap here, and we have a down close candle that price triggered. All right. So this is giving a signature of strong low, right? Strong low. So this can be like an anticipated SMT shift, because if this is a strong low in EU, right, and we're anticipating to sell GBP USD, right? I'm coming. GBP USD. 1D or a month. So if this is a strong low for EU and we are still anticipating price to sell for this guy, so we might see, we can see SMT, right? This one we sell from here, make lower low, and this one we sell from here, we'll be unable to make a lower low because this is a strong low. Price would not want to take that low out. Do you get what I'm saying now? But it might happen, right? It might happen. It might actually happen. Do you get what I'm saying now? So based on based on my perspective right now, I would want to just buy this guy to this gap, to this breaker as well, right? This is a nice breaker that took out this high. So we have sell side, buy side liquidity at this high. Do you get it? So we have not really seen a significant break of structure to really trust this bullishly. If price is going up, it is essentially going up to take out the sell side, this buy side rather. So probably then and only then we've had an official market structure shift in price. So we can be looking for higher prices. Do you get? So that's what I'm looking out for this guy. So this is the draw on liquidity, right? And don't forget um why I'm suggesting that this could be a strong low and we might be seeing some sort of SMT in price as far as this guy is concerned. These two guys is concerned. So this is not really showing us a strong low, right? This means that we want to see another short, right? We want to see shorts in price that will take this low. We want to also see shorts in price from here, but we will not be able to take this low, right? So this one will be making lower low, this one will be making higher low, right? A strong low, a weaker low. So if that happens, it means that you'll be buying EU because it is very strong. It is more stronger. Do you get? It is more stronger. And you don't want to really buy this guy because it's still showing weakness by making a lower low. Do you get what I'm saying? But you can still buy it. It can still move. But when it comes to momentum, it's not going to have enough momentum compared to this, how this guy is going to have momentum. Do you get? Another thing I want to show us is that how does market actually opens on every H4? How does market opens on every H4? Don't forget, I said that H4 can tell us more story about weekly time frame, right? So how does this guy opened? You can see that they are currently diametrically opposed. They are not well aligned right now. So I will not be looking at what price is doing right now. It is not very well investing right now. Do you get? Because several weeks now on indices, price or I think across every asset classes, price has been, opening quite strange, right? So another thing I want to show us, you can see right here, I think there's something very significant here. This is Sunday open. I think last week. I'm coming, guys. Yeah, so this was Sunday 09, Monday 9 p.m., Monday 9 p.m. So you can see that this was making a higher low, this was making a lower low, right? So there's a crack in correlation here. Let me show us. There's a crack in correlation here, right? So this is showing more strength. This is showing weakness, but still they deliver, like they both moved higher. So that's the point I'm trying to clarify on that monthly time frame, right? So as you can see right here, that was what I was trying to look out for. Probably we have another cracking correlation, but unfortunately we can see we are still very well distorted. We don't really have a defined direction yet. Do you get? So that clarifies that. But for this week, you can look for something like this at every Tuesday. Just look for during Tuesday, what really happened? Is there any shift in market structure? Is there any crack in correlation? And preferably use H1. Use H1 to look for that, or H4 as well. But you might not see it very well on H4. Use H1 or 15 minutes to look for that, for this kind of thing. Every week, every single week, every single week, even if you don't have a bias, just open your chart, wait for Tuesday, a new week, wait for Tuesday, wait to see something like this in price. When you see that, when you see that, bro, when you see that, it's done, you know. And what happened? Price just bought. Inside our POI, inside our POI, we are bullish, but see what happened? Price just shows strength and then we continue buying. So you can see this is what I really want to talk. Just GBP USD, Euro USD, every Tuesday, whenever week open, just wait for Tuesday. Okay, I'm waiting for Tuesday. I want to see something like this in price. When you see that, that's the true open for the week. Tuesday is a true open for every week. And at every true open, something like this will happen. So you want to wait for that. So currently we are not saying, and as you can see right here, as you can see right here as well, we have another distortion here. We have another price action distortion here. So you can see price made a lower low here, and price made a higher low here, right? What's that showing? Strength, right? This one is showing strength. At the midweek, at the beginning of the week, it was weak, but at the midweek, it's showing strength, right? But this one is showing weakness. If you consider the amplitude of the movement, this is the amplitude of this movement, right? And this is the amplitude of this movement. You can see that this one is bigger, which is more reason why it's stronger at the midweek. That's why it moved more distance compared to this, because it's stronger than this. Do you get the point now? But at the open, right, this one moved more pips because it was stronger at the open. But this one moved lesser pips because it was weak at the open. Do you get the idea now? So that is what I want to share to us this week. So, but don't forget that we are still bearish. We are still very much bearish for price. We are still we are still very, very much bullish for price. We are looking for higher price, but on a bigger time frame. From my perspective, you don't have to follow what I believe. You don't have to follow my mental construct of what price is going to do, right? But I'm just giving us idea, and I'm giving off nuggets, significant things that price do that tip its hand off that, okay, I'm going up, I'm going down. Do you get what I'm saying now? That's the idea. So I want you to also think out of box or outside the box. Do you get what I'm saying now? So I will stop here for today. Probably midweek, I will give us a view of what indices are going to, because currently Nasdaq is at the all-time high, so I don't really have much idea of what it's going to do, right? Unless I see something significant on intraday price action. Do you get? But for now, I don't really have much idea about what it's going to really do. So I will stop here today. I will see you guys in the next one. I wish you a profitable week ahead. Cheers, guys.